Good morning, traders. This is Stavros from Orbex head offices. Following a mixed NFP with indeed disappointing wage growth last week, Trump escalated his long-term battle with the Fed, saying that there is no inflation and that the Fed should cut rates and restart quantitative easing in order to turn the economy into a rocket ship. Those were his words, by the way, not mine. Now, today is Monday, the 8th of April, and we're expecting markets to be quite quiet on the economic front, with some medium impact indicators from Canada, building permits, house starts, and also the US factory orders. Now, on the trading front, though, we might see a continuation of last week's flows, where we saw the Goldilocks report supporting the stocks, sending the dollar index trading a little bit lower. Note that none of the recommendations here constitute investment advice, and losses can exceed profits. Okay, let's start with the 4-hour US dollar index. We identified this sort of wave like a couple of weeks ago, if I'm not mistaken. We saw prices moving down here, and since we have moved with an impulse wave, which I have a feeling that might see prices getting a little bit higher up to retest this level, 97.70. Now, because we don't get any significant bullish signs, I would say, actually none at all, I am a little bit more also optimistic on this following scenario, that prices actually finished the fifth wave over here and now might move lower. Okay, so this could be the ABC pattern. We want to see prices breaking below that level. Now, if that happens, if prices start moving lower and we see a rejection right here, we might be able to see prices moving in an ABCDE pattern and then either breaking lower or breaking higher, depending on what further signs are going to show us. Now, we do get two signals here, one hidden divergence and one normal divergence, both bearish on the US index. So for that reason, this second scenario I mentioned, that prices are likely to go lower, is a little bit more, it has more probabilities of coming through. Okay, now I would pay attention to that level, of course, because we might see prices moving into a triangle pattern before we get any further signs. Now, if we go a little bit lower on the 1-hour chart, we'll be able to see supported signals on the bearish side. And what I would expect now, because the Bollinger Bands are pretty squeezed and they just started being a little bit more volatile, I would expect prices to move all the way down here. Okay, and what I want to see a bullish convergence. Okay, now if I see that signal, prices, we are most likely going to move into a range within this triangle pattern. Okay, but if we don't get this sort of signal down here, if prices obviously come all the way down here for near this low, then we could see a double bottom, or prices moving a little bit lower. Now I want to go quickly on the S&P as well. We are looking at the 4-hour chart. We have corrected once. We are also on an ABC again. Now the question that everybody keeps asking is, are we going to see prices moving higher or not? Well, I do get some bearish signals over here, so I might be more prone to the selling side as we speak, and see this high as a failure to reach fresh highs. Okay, that would also be a very good activity level. Is where the bears started selling strong back on the 15th of, probably it's like what, October, this, yeah, 15th of October. So if we go lower, We do see prices still moving. We're on an impulse wave or 5 wave. If this is the end of the wave 5, then we're going to see the ABC here. And from there, if we get to get a nice hidden divergence with the RSI, we might see prices start moving higher. But for the short to medium term, most likely going to move on an ABC correction, and we're looking at further close around 28.70, and that is because, of course, we have 2 signals on the RSI and MACD showing us that there is some bearish bias in the current market. I want to also talk a little bit about the German index as well, okay, because it has had a very good run over the past few months, I would say, okay, in Q1 of 2019, and that is because Euro has been weak. We moved on impulse waves up here. We had first correction, second correction. We might see the third and biggest one, or we might see prices moving higher. That depends, of course, on how the euro dollar performs as well, okay? Now, I do get 2 bullish divergence signals here on the RSI and the MACD, which makes this scenario a little bit more bullish. Now, on the shorter term, we have moved in an impulse wave and ABC, and now we could have completed the second wave to the upside, where potentially we could see now a correction down to 1180, which is a previous high, or even lower, okay? Now, let me just delete this quickly. Now, on this short term, I don't get any signs on the bullish side. I get these bearish signals, and that's why I'm expecting prices to move a little bit lower. But I'm expecting this to be temporary, okay? And what I would prefer to see is getting a nice signal here between the RSI and Bollinger Bands, okay? And the RSI and between RSI and prices, of course. I want to see bullish divergence when prices move lower, in order to be able to actually identify whether there is some support on whether the market support the bullish scenario or the bearish scenario. I want to thank you for joining us today. And if you like our video, of course, hit the like button, share it. I would recommend that you keep an eye on our blog. This is where we'll cover our latest news, we'll publish trading ideas, and provide all the necessary tools a trader's needs, serving you responsibly.